Welcome to our special episode of India Financial Series. I have a very special guest with us. We have Mr. Sanjeev Sanyal with us to give us insights into the current economic situation in the country. Sir, thank you so much for joining us and a pleasure having you on this show as always. Let me start with the good news. We have seen robust IIP numbers. The growth is looking good. India obviously remains fastest growing large economy among all global economies. So, what is your reaction to the latest macro indicators?
Well, all the growth indicators are consistent. You can see that we are getting very high numbers from industrial growth. Uh, the credit offtake has also accelerated. We have had some decent exports growth as well. And of course, GST numbers have been very strong, as have indeed the direct tax collection numbers as well. So, if you look at all the numbers, they are consistently suggesting that we are now clearly seeing strong growth recovery coming out of the COVID period.
Obviously, now we have come out of the COVID period, and obviously, there is an argument, which some people still put up that obviously there is an base effect. But last year also we saw a robust recovery, especially the quarter that we are referring to. The second problem that we have right now is, the inflationary expectation management. It remains above the comfortable range of 6%. And we have seen hike in interest rates in India as well as globally. Uh, is that a cause of concern right now for you?
So let me answer your point about base effect right up front.
Hmm.
We can't eternally claim that base effect is driving higher year-on-year growth numbers because that big lockdown we had was back in the year 2020. Since then, we saw very high numbers in the year 21-22, and now we are in 22-23. So, a base effect somewhere in the past does not eternally keep showing up in the numbers. There may be some lingering effect, but I would argue that given how strong these numbers are, even in absolute terms, look at the GST collections that are happening. They are clearly in another range for where they were pre-COVID. So this is not just a recovery from a trough. This is genuine growth on top of the pre-COVID situation. So I think these are strong numbers, but you have brought up what I think is a more valid concern, which is that there are inflationary pressures around the world, and we are an open economy. We are dependent on imported commodities, particularly energy, and I think in that context we should take into account and take seriously the inflationary pressures that we are facing. Now, of course, much of this pressure is imported. I mean, I would argue that given the supply side reforms we did during COVID or even before that, the domestic dynamics of inflation are not worrying. This is imported inflation, and there is limited things we can do about it. You can, at the margin, we can cut taxes on fuel. There's a price we pay for it, but anyway, that can be done. And we have done it as well. But as I said, it only works at the margin. A country dependent on imported fuel prices is, going to be subjected to the vagaries of international oil prices till such time that we can find alternative sources of energy and move out of this issue.
Right. But sir, in that case, there is a concern globally right now that the situation may aggravate or escalate as we get into winter season. And if, Russia decides to switch off the gas supply to Europe, which they are constantly threatening, then we may have a serious recessionary pressures along with inflationary pressures, which we are already facing. Now, how is India going to prepare for this?
Well, I can't directly comment on the bilateral relations between the Europeans and Russia, but I can say that those who expect poor Indians to pay for high energy prices while not being prepared to turn down their heating over winter should reflect on what they are demanding of a country like India. obviously we need to protect our interests, and we will continue to protect our interests to the extent we can. Of course, high energy prices and disrupted supplies is a difficult thing for all of us. And we continue to argue that we would like a return to normalcy on the geopolitical front so that energy prices can go back to more reasonable levels. That has been our consistent argument and continues to be so.
Right. Sir, also, I think one major step that Indian government has taken, and obviously it will evolve going forward, is the internationalization of rupee. And as this initiative evolves, first of all, what are the immediate benefits and immediate impact? And then maybe we can speak about how it will evolve going forward. Is it a threat to dollar trade, or how will it coexist with the existing dollar trade that we have?
So let me be very clear that allowing for international settlements using the INR is one important step in a long journey towards turning the Indian rupee into a hard currency. This has required many steps in the past. Very early on, of course, the reduction of capital controls. Then over the last decade, the anchoring of our macroeconomic system through a inflation targeting system, the cleaning up of our financial system, whether it's the banks or the deepening of our financial markets. All of these are steps along the way that allows our financial system to be able to deal with the bumpiness of international financial flows and internationalization of the rupee. So we have just taken one more step in that direction. Over time, hopefully, we will keep taking more and more steps. In itself, it will have limited effect in the immediate future because it does require some time for whether importers and exporters to begin to think of the rupee or in terms of other countries with whom we have bilateral trade accepting it. So there will be a period when the glitches of this new mechanism will get worked out. So medium term, we will begin to see a sort of expansion in this. And longer term, as I said, we should, as an emerging economic power, we should aspire to have our currency as a hard currency and perhaps even be a part of the IMF's SDR basket. But that is in the future. As far as challenging dollar dominance, let me point out that there are many hard currencies that already exist in the world, and that does not impact dollar dominance at all. The dominance of the dollar as a global anchor currency is a different discussion altogether. It is not directly linked to the internationalization of the rupee.
Correct. Now, sir, I have a question on the way central banks are currently thinking, or let's say targeting inflation. Can we comfortably say that India has been slightly ahead of the curve, because we saw how Fed went into overdrive, and in fact, some people do believe that they are maybe in an overdrive in their efforts to contain inflation. We have seen what is happening in Europe. Would you place India and a couple of other emerging economies slightly ahead of the curve in terms of global inflation management exercise?
I think the whole idea that we were ahead of the curve is itself thinking about it in the wrong way, because it suggests that there is a curve and we were somehow ahead of them on it. The point that we made throughout this entire period is that there is no curve. The future is naturally uncertain and it's not possible to be able to predict it. Therefore, throughout this period, we were very cautious and conservative about how we used fiscal, monetary and other measures. We continued to concentrate a lot on doing supply side reforms, and we had a much more iterative approach to doing policy making, which we pointed out right from the beginning was a response to all the uncertainty we were facing. So rather than say we are ahead of the curve, we'll say we have a different framework altogether, and that framework has proved to be much more resilient in the medium term, as many of the what we would argue were unnecessary and unnecessary aggression in terms of just opening up the gates of the fiscal and monetary policy in many countries, which we had warned against right from the beginning, that has, our view has turned out to be, accurate.
Now, so one more thing is, while I mean, obviously we have seen a little bit of upward movement in terms of interest rates, and obviously the banks have been passing it on to the consumer. The consumer demand has remained buoyant, and we can see that in different sectors, be it automobiles, the whole consumption basket. Now, do you see this sustaining the consumption-led recovery? I mean, now I don't want to use word recovery, but the consumption-led growth that we have witnessed in past couple of quarters?
Now, obviously, increasing monetary sort of tightness, whether it's in terms of interest rates or otherwise worldwide, the whole purpose of it is that it does restrain demand to some extent. Otherwise, why bother doing it? That is what the US Fed is trying to do in terms of hiking interest rates very aggressively. In India too, if you have seen, the Reserve Bank of India has been steadily tightening monetary conditions. And yes, it does at the margin provide some friction to the expansion. That is its very purpose. But let us be also clear of the context that we are doing this at the margin while we are going through a very significant recovery. So, by all accounts, our economic and and overall macroeconomic conditions here remain very robust, even with the caveat of this imported inflation problem. And while the Reserve Bank may at the margin be sort of adding friction to it, the general momentum is very strong, both for the medium term and certainly for the long term.
Right. In fact, that leads me into my next question, which is basically about the banking system. We have seen obviously robust performance when it comes to the overall banking system, or even a couple of indicators like, let's say, the credit offtake. We have also seen digitization of banking happening at a very rapid pace. I mean, it reflects in the online transactions or the UPI data that we constantly keep referring to. Uh, so this obviously will gather momentum as we move forward in terms of the current economic growth, which looks solid, or would you want to be slightly conservative on credit offtake and also on the growth of banking system?
Well, one of the things we did do over the last many years before the COVID crisis was cleaning up the financial system, specifically the banking and non-banking sectors. The reason for that was very simple. There had been a period of time between 2006 and 2013 where there had been sort of excessive lending, unregulated credit behavior that had to be cleaned up. And when we did clean it up, it came at some price, in the sense that growth did slow down and there was some amount of pain in both the financial system and even in the corporate sector. But it was necessary. And as a result of that, when we went into this COVID crisis, we had a relatively deleveraged, clean banking system. That continues to be the case. We have, as we speak, a very well capitalized, cleaned up banking system. It is consequently in a position to expand financial resources to the economy. Even with some increases at the margin of interest rates, clearly demand for this credit remains robust. And I would argue that even if there are some more sort of ripples along the way going forward because of global tightening or whatever, our financial systems do not seem to be under any stress at all. And I'm not just including the banking system. This is even true of the financial markets. Financial markets go up and sometimes they come down. That's their very nature. The question is not whether they go up or come down, or whether this happens in an orderly fashion. And it is very clear that it is happening in an orderly fashion. There is no stress in the system as such. The same is true for our credit system. There is no stress in the system. So as an economic manager, that is my real concern, not whether or not according to economic cycles, credit offtake goes up and down. That is a part of the cycle, and that should be a part of the macroeconomic management of the central bank and the Ministry of Finance, as may be required at that point in time.
Right. So now the second part of my question is, if we look at the economic recovery, obviously it was not a uniform across the sectors recovery. So some sectors are already at pre-pandemic levels and continue to grow. Some sectors are kind of catching up. There could be few sectors, especially the small and medium enterprises, within whom a few segments could still be in terms of not fully recovered when it comes to the overall economic recovery. Now, in a inflationary environment and rising interest rate scenario, how do we ensure that those sectors or segments continue to recover at a rapid pace? It could be digitization of banking, it could be cheap credit for some targeted segments. I mean, what should be the ideal strategy?
So there are a couple of things that we need to keep in mind here. Clearly, any recovery will be patchy. I mean, there will be
Hmm.
some sectors that will gain more than others, whether it's large industry or small industry. Now we need to make sure that wherever credit is legitimately demanded, it should be able to reach that. And of course, digitization helps the case in many ways in terms of whether it's in, price discovery or the discovery of credit worthiness and so on. So all of that, as well as of course reach, all of that gets benefited by digitization and other financial innovations. But at the same time, do remember one more thing, that every economic cycle has to allow for a significant amount of creative destruction as well.
Hmm.
Otherwise, what happens is that sectors and businesses that are inefficient do not get weeded out. So
Hmm.
we shouldn't get so worked up about some parts of the and sectors not recovering, so much so that we begin to then protect or even support inefficient sectors. So we have to be always cognizant of that, so that some amount of weeding out continues to happen throughout the way.
Hmm.
So there is a very big balance we need to make between protecting those who have economic prospects and just need some support, and protecting inefficient companies or sectors that are rapidly becoming outdated and anyway will over time get whittled away. We shouldn't be doing that. We have to allow that creative destruction, that natural selection process also to happen. So there's no hard and fast rule. This is more art than science, but to some extent that balance has to be maintained.
Absolutely. That's very well said. So, last question to you. Uh, this entire resilience and the recovery and maybe strategically right initiative that India was able to roll out during the pandemic was thanks to the, I would say, robust digital ecosystem that we have created in India. So, right from transferring benefits directly to beneficiaries to the COVID relief. So, banking and even non-banking digitized world that we have created in India has played a crucial and a vital role. Now, obviously, we have to constantly innovate and see to it that it continues to grow. What is your vision on that?
So we have to be clear that digitization is a tool. It's not an end in itself. It has certainly been extremely valuable in terms of providing the back end, in terms of whether it's direct transfers or allowing new innovations in credit and so on and so forth. But let us also be clear that if your point is that digital innovation becomes an end in itself, can be quite problematic. For example, whether should we consider allowing any and every digital company to becoming a bank. Now, if they
Hmm.
do want to become a bank, then we have to be willing to also impose banking regulations on them. Because you see, there is a difference between bringing new value as a result of bringing some technological innovation, and being able to do business because you are bypassing the regulations, which are there for good reason, by the way. So there are good reasons why the banks and non-banks more recently have certain regulations placed on them.
Hmm.
And if financial innovators have business models whose main selling point is that they do not they are bypassing these regulations, then obviously that is not a tenable playing field. You have to have an even playing field. If on that even playing field they are performing better, that's fair enough. Whether that's an argument for allowing banks to do more things, or they should go out and innovate in the same way, that they should do that. But let us be very clear, and I think the governor of the Reserve Bank has also been very clear, that allowing digital companies to basically do banking without any of the regulations and liquidity requirements and other things of which the banks are expected to keep, that is, I think, not correct. Yes to innovation, but not to regulatory bypass.
Absolutely, sir. Very well said. Thank you so much for joining us, sir. It was pleasure having you on this show. And we look forward to further robust recovery in Indian economy and resilience that all of us are looking forward to. Thank you.